Hopkins is going to introduce our next speaker, but before that, we got a drawing from a large cooler from Ag South Farm Credit, and that number is 576852. 576906. Didn't make a noise. Good. 576855. David Crawford. All right, Chris, we'll turn it over to you.
Taylor, do I read the part that Jeff and Fail put in here about if he gets a raise from this, we get a nickel a pound additional September? Yeah. Henry N. Hank Reichle Jr. is President and CEO of Staplcotn, headquartered in Greenwood, Mississippi. Founded in 1921, Staplcotn is the oldest cotton marketing cooperative in the U.S., and it markets approximately 2.5 to 3 million bales of U.S. cotton annually on behalf of its more than 5,000 members. Hank, a Mississippi native, received his Bachelor of Accountancy at the University of Mississippi. He started his career in public accounting with the Memphis, Tennessee office of Ernst & Young. In 2001, Reichle started his career in the cotton industry when he accepted the position of corporate controller of the newly formed internet-based cotton exchange, the SINC, where he soon became Chief Financial Officer. Reichle joined Staplcotn in 2004 and was promoted to Senior Director of Export Sales in 2005. He assumed the position of President and CEO of Staplcotn in 2018. Reichle served on the board of the National Cotton Council, AMCOT, the SEAM, U.S. Cotton Trust Protocol, and the Memphis branch of the St. Louis Federal Reserve. He is a former president of Cotton Council International. Reichle and his wife, Mary, reside in Greenwood and have 3 sons. He is involved in several community and civic organizations and active in his local church. Right.
Chris, good morning. Good morning. See if I can move this mic closer. I like to talk with my hands, so I can't use it to hold the mic. Want to say I am aware that it is almost lunchtime. I believe we're getting close to that, so I'll keep that in mind. As you can tell, I like to eat a little bit. I'll also say that we appreciate the opportunity to sponsor this event, to be here to speak today. We've got staff here. We appreciate what the Georgia Cotton Commission does for our industry, and appreciate what Georgia means to the cotton industry and what our members here mean to us. We market about 35% of the cotton in the state of Georgia. We're proud to be over here, and again, thank you for this opportunity today and for your attendance. So, quickly, I want to go back and look at what happened over the last year. Last spring, we had really high cotton prices, and then we had a big drop-off in global consumption. And as you can see, it's on par with some of the notable drops in consumption that we've seen in the past 20 years. So, the Great Recession, $2 cotton, then COVID-19, of course. And then we had a really good rebound coming, and then all of a sudden we had this drop this year. I've titled that now the inventory glut and the Fed. But you always have to have an icebreaker, so I said, what's better than inventory glut? How about inventory hangover? And that led me to think about the movie The Hangover. And if you recall, the plot of that movie, the whole time, these boys had too big of a night, and they were trying to figure out what happened. What happened over the last night? Where was their buddy? So, what happened? First off, I think if we talk about the collapse in cotton prices, the first thing that happened was that inventory levels rose at brands and retailers. So they had all this business as everybody was pent up at home, had tons of money to spend from government stimulus. A lot of people still had their jobs, so they had 2 incomes. They couldn't go anywhere, so they bought goods. The textile mills were closed. Plants were closed. So inventory levels were down. Brands and retailers saw this opportunity. They ordered as much as they could from everybody. They didn't order one pair of jeans that they thought they would sell, they ordered two. Because they said eventually, one of these isn't going to show up and I'm going to have good demand for it. Well, eventually all those did show up, and by that time, retail sales started to level off. So they did a really poor job predicting how much they would need. Last year, those inventory levels started to build, so of course they reduced their orders throughout the supply chain, and that resulted in less orders for yarn for our direct customer who is a yarn spender. And then also in the second and third quarters of last year, Chinese prices began to collapse. And as I'll show you in a moment, they really collapsed to levels that we don't normally see. Then, of course, the Fed was hiking interest rates, and that caused a lot of macroeconomic worries. Then in emerging markets, they had a dollar liquidity crisis. So our textile customers in a lot of these countries, they have their own currency in their bank accounts, but they couldn't get that converted into dollars to purchase cotton on the market. And then, of course, in the wake of all that, speculators sold. What didn't happen, though, was that we didn't have a bumper crop. We're not overplanting cotton in the world. We just last year suffered a lack of demand. So I'm going to give you a few slides that kind of point that out. This is what apparel inventory levels did in the United States. This is where they were pre-pandemic, back here. They dropped down, that led all up to those big orders, and then all of a sudden, all of that inventory showed up, and brands and retailers started looking at this and said, cut the orders. So that was one big problem that we've actually never seen the chart do anything like this in the past. So as we know with COVID, there were a lot of first, and this is another first. But as you see, retail sales actually did not fall off. So they didn't fall off like cotton consumption did. They just leveled out from that bump that we saw back in the pandemic recovery. This is the chart of the Chinese futures market versus ICE. And normally there's a premium. Last year when the market ran up, China led the way. And then when the market came down, China led the way down. Fortunately, one of the positives we see today is that trend has reversed and China's price is starting to open up a premium versus the world again. And that's good for their import of cotton, but also for their import of yarn from other spinners around the world. And then the speculator sold. So this is a graph of the managed money position in the futures market. That's a traditional speculator. They sold the market in particular right during this time period, October 1st to October 31st. If they were going to sell, if you owned stacks, you're glad they sold then. They drove the price of cotton down about 10 cents a pound over that month, which ended up really being one of the reasons that the stacks price this year was lower for the harvest price, and therefore the prices were better. But if you'll notice, when the speculator sells, it forces the market down. And last year, we lost the interest of the spec in the futures market because they turned from inflation worries to deflation worries as they saw all that was going on with the Fed. So, if you think back to last May, we had cotton prices $1.20 a pound for current crop. We're ending the year, it's like in the mid-80s where we spent a fair amount of time this year. But in the U.S. balance sheet, stocks actually went down. That's what's so wild about this. So we had a small U.S. crop. It took us a while to get our export number to where it needed to be, but we got there eventually because we didn't have a whole lot we had to sell, right? We had a small crop. But U.S. stocks actually came down in the United States this year. Yet the price dropped, and it was because of a lack of demand. So as you hear me today, you're going to start to hear some supply constraints. Remember, though, one of the big key features to the market is not just the supply, what's going on in Texas or China, but also demand. Demand for our cotton to go into a spinning mill and ultimately go into a product. So it's important to remember that there are two sides to the equation. But as we look forward to the new crop year, which we're currently growing now, USDA is forecasting a global production and consumption number about the same. So we'll have no rise in stocks. Last year we did have a rise in stocks globally, maybe not in the United States. So really what the USDA is saying is that we expect production and consumption to be about equal, but note that their consumption figure is almost 7 million barrels more than the prior year. So what USDA is factoring into their equation is that we will be balanced on the production and consumption if consumption rebounds. Today, as we stand, we are not consuming 116 million bales at the spinning mill level. So there is some assumption in here that because inventory levels will eventually work down in the supply chain, brands and retailers will begin to come back and replace their, will give normal orders for cotton yarn. There is some assumption in here that things get better than they are today on the consumption front. I, for one, think this can happen. I hope it will happen. But just talking to our customers today, they have not seen this kind of pickup yet in their business, but they all remain hopeful that it will happen. This is just a quick look at global harvest to acreage and yield. I just want to make the point here again, we're not overproducing cotton globally. No one's excited about growing cotton at these price levels relative to the cost of production and relative to other crops. So the problem, again, is on demand, not with oversupply. Speaking of supply, it's really funny when you look at this chart this year versus last year and what we're expecting for new crop. We're expecting a big decrease in Chinese production and an increase in the United States and Pakistan. This is all really partially in China weather-driven. There's also some things going on there that might reduce the amount of acreage that they have in Xinjiang in the future. But China got off to a poor start on their production this year. They lost some early season plantings, probably had a reduction in planting as well. So the Chinese crop is expected to be down this year, almost 4 million bales. But the U.S., the weather is supposed to be better in Texas, maybe not as quite as good as we thought. And Pakistan had a big flood last year that hopefully they avoid, that lost a lot of their crop. So if you looked at this last year, the U.S. and Pakistan were the big detractors to world supply, and China was accretive to it. This year it's the exact opposite, and I think it's important on both ends that China has potentially a smaller crop because we're seeing some strength in China and the price lately. And just remember that Pakistan, if they have a 2.6 million bale larger crop this year, that's 2.6 million bales they won't import. And a lot of our business last year went to Pakistan. Okay, so here's the U.S. supply and demand table currently issued by USDA. It calls for a slight increase in stocks, about a 2 million bale rebound in production to 16.5 million. Slight rebound in domestic consumption, but again, we're not really seeing that yet. And then an increase in exports of about a little less than 1 million bales. Small rise in stocks, and I'm going to tell you that historically over time, there are a lot of factors that go into the price of cotton, but one of those is definitely the U.S. balance sheet. That's where the futures market is held. We're the largest exporter in the world. So a big factor in prices ultimately from a fundamental standpoint over the year will be are stocks rising or falling in the United States. Last year I mentioned that stocks actually fell a little bit with the price drop. For much of the year, we actually looked like we were going to build stocks in the United States because our export number was well below. I'll show you that in a moment. So just to understand why we're focusing in so much on the U.S. Let's break down these numbers and see if we think they're accurate and how they might change. First off, on this export number, 13.75 million bales. Every year as we enter the crop year, you have to say, well, how are we doing so far? Because our company and other shippers, we're making sales of new crop before we even get to new crop. Right now, we're not doing too well. For the 23-24 season, we've only sold 18% of that projection. If you look back since 2016, this will be the second worst year compared to 16. So normally you've sold a little bit more than you have today. So one thing that we want to say is we've got to see sales pick up in the export market for our crop. It's not as though we haven't sold anything, but we would say at this point in time, new crop sales have not been robust and not as robust as they were in a few of these other years. So how much do we normally sell from the United States? Since 2012, our average offtake between domestic and export is about 16.7 million bales. From 16 to 21, the average offtake is 18 million. So 16 through 2022, we ended up with, 21, we ended up with about an 18 million bale level of demand every year. Last year, we were well below that. Again, partially because we had a smaller crop, and partially because business was slow. This year, we're expected to have an offtake of about 16 million. Is this doable? Absolutely. All I would tell you, though, is we just need to see that global demand number start to pick up, and we need to see our export sales pick up. But at this point in time, I'm still very optimistic that that is possible. So are we unrealistic on the export expectation on our balance sheet? Probably not, but we do have some work to do on that front. I mentioned just a moment ago about what a strange year it was for U.S. exports. This is what exports normally look like in terms of our commitments into the foreign market on a weekly basis from the first week of the marketing year to the end. See how they just kind of gradually go up and then they pick up some steam as we come into harvest in October, November, we start to make more sales. This year we came in with really good sales, but business just went dead for about 3 months. That's because, once again, the brands and retailers just quit ordering because of those inventory levels. And that's when everybody really, we had seen the fall in cotton prices and we were hoping to be optimistic that they would come back up. What happened? We just simply lost demand for 3 or 4 months of the year. That the only way to explain this is that the mills weren't running, and they weren't running because they didn't have orders like they normally would from the brands and retailers. I want to say, though, on this front, something we've been dealing with ever since the pandemic started was just a broken supply chain. So in some of these years, you don't see it as pronounced, but there are times when we're really having a difficult time shipping cotton. We're late shipping cotton. Fortunately, in calendar year 2023, things started to improve. I want to take a moment just to plug the Port of Savannah and tell you how valuable it is, not only to the state and to Staplcotn, where we ship a lot of our cotton for export through that port, but also the country. We're seeing more and more Texas cotton come through Savannah. They really are doing a good job there. They've got a tremendous amount of U.S. ag exports coming out of that port. And I just tell you that we're very fortunate that we have that port locally here for our Georgia cotton, but also for cotton in general to get our product to the market. If we were reliant on the other ports as much as we have been in the past, I think we would still have that as a challenge for us. But by and large, the situation on both the East and West Coast are much better. We don't have all the ships sitting at anchor that we had last year. Import rates for freight have dropped down some, which is, it doesn't have a huge impact on the export freights, but a lot of people were talking about how expensive it was to get a container to bring goods into the United States from Asia a couple of years ago. Those have normalized and actually come down some. But so you would look at it today and say things are a little bit normal. And I would say they are normal, but it's a new normal. We have a geographical mismatch of where the imports and exports are coming in that's creating equipment issues. So you don't just, as you know, you don't just magically move cotton from the warehouse to the port. You have to have chassis, you have to have trucks, you have to have containers, you have to have spot on the rail. So all of that, when we have a mismatch, that can be difficult. Particularly, we've seen a chassis mismatch and shortages in certain markets. The vessel schedule reliability has improved, so the amount of times that the vessels actually sail when they say they were going to has improved, but it does not eliminate the fact that a lot of times your shipper is going to be late picking up cotton at the warehouse because they still move a lot. And then, so we need flexibility at the warehouse to the greatest extent possible. Then we have these currency issues in countries like Pakistan and Turkey. Those are some of our largest customers, and they are having a real difficult time getting the dollars to pay for the cotton that they need to buy. And then, of course, you've got, with the drop in rates that we're seeing on some fronts, but the operational costs going up for our logistic vendors, we're really seeing that some of the smaller ones and the less fit ones are getting squeezed out. And then, of course, like most businesses, labor issues continue to affect the segments, all segments of the economy, but particularly on the logistics front. And so, from our business standpoint, what we have seen is that we can still move about the same amount of cotton that we used to move into the export market on a monthly basis, but we have to do it with a lot more people. It's a lot more manual, it's a lot more systematic, and it requires a lot more collaboration with the warehouse. So, while I would say that logistics issues are not nearly as great as they were the last couple of years, a lot of the post-COVID issues have kind of still manifest themselves, and we see them. It's just more difficult to move cotton in an efficient manner than it used to be, but thank goodness the situation is much improved. So on the production front, we're looking at an acreage decrease pretty much across the board, across the entire United States. only one state there, Kansas, adding a small percentage of acres. In the Memphis Eastern Territory, we're looking at a 15% decrease. We've studied this number pretty closely. We handle a good bit of that cotton. It's a pretty reasonable number. I'll break it down for a couple states in a moment. But that's almost double decrease in the Mid-South as it is the Southeast. So the Southeast cut about 11% of its acreage, whereas the Mid-South cut about 20%, so an average of 15. Southwest, planted acreage and harvested acreage don't really correlate a whole lot, but definitely Texas acreage did come down some this year. So across the board in the United States, farmers responded to the relative prices and the production costs to decrease acreage close to 20% across the United States. Specifically in Georgia, a 90,000 acre reduction is what USDA NASS is currently forecasting. Our numbers would indicate that Georgia did not quite plant 1.2 million acres. It's probably a little bit less than that. Tennessee is probably not quite 310,000. Everywhere else is getting pretty close, it looks to us. So by and large, I don't think the play in the production number is going to be that acreage is grossly under or overstated. I think it's really going to come into, what kind of crop do we make in Memphis Eastern, but more importantly, what happens in Texas. So at this time of year, USDA doesn't give you a state-by-state production level. They give you some clues. You can back into the number. And right now, USDA's current forecast for U.S. production, as I showed you on the balance sheet earlier, is at 16.5 million bales. And I apologize, I know these numbers are small, but I want to point a few of them out. I don't think we're going to be able to make that number. USDA has been lowering the abandonment percentage for Texas in the last two reports they came out with. What's happened over the last month in Texas with the temperatures and the heat, the fact that they got planting rains, but they still had subsoil moisture issues, I think we're going to see that Texas abandonment will ultimately be higher than what USDA is forecasting. So if I were to put an alternative number for the 16.5 million, I would say based on current conditions for the crop in the Memphis Eastern Territory, instead of an 8 to 8.1 million bale crop that USDA is likely forecasting today, I think that number could creep up. I think we can make as high as an 8.5 million bale crop if what we have today gets to make it to harvest under decent conditions. In the Southwest, the forecast is somewhere around 7.8 to 7.9 million from USDA. I don't think there's much chance of making it. I think that would be if we had a remarkable turnaround at this point in time. That number probably is 1 million to 1.5 million bales lower if we're realistic today based on the conditions that we have. And then the far west continues to reduce acreage, and all of the far west, including Pima and Upland, is expected to be somewhere around 600,000 acres. So by and large, the far west is reducing their acreage, and it's really now coming down to the mid-south and southeast, and essentially the southwest of Texas. So this is just a summary of what I showed you there. The crop's expected in this number from USDA to be about 2 million bales larger than last year. With the acreage reduction in the Memphis Eastern Territory, the fact that last year we had really good yields in that region on average, and the fact that the Texas weather has been uncooperative as of late, I would say that we're probably looking at a larger crop than last year, but smaller than the current estimate. Probably somewhere in the 15 to 15.5 million bales would be the consensus today. And why is that? Well, Texas has definitely improved. Here's the drought monitor, but you can see there's still some drought that exists, particularly in the southern half of West Texas, and even the coastal bend in central Texas and South Texas in the last month or so. That they had a really good crop, but they've had this heat as well, and that's cut some of their production potential as well. So one of our staff members did a crop tour in Texas, and I'm going to see if I can pull this off. I'm going to play some of the video he put together for us. He shot his drone and give you some glimpses of what things look like out in Texas these days. And I apologize if it's really loud at first. We'll fix it. We'll figure it out. Or maybe not loud at all. What do you think?
No, it's right.
way to use it. So what you're seeing is, look at these two fields that are across the street from each other. First one didn't look real good. Second one's pretty much not there. So these are all fields that had a fighting chance 6 weeks ago when they had plenty moisture. They just hadn't received any follow-up moisture. And the temperatures are really, really high. This was taken around the middle of, I think it's the week after 4th of July. So Shane, you nod your head, maybe 2 weeks ago. And the other thing you'll know is what crop is out there is extraordinarily late. So we're talking about being 2 weeks behind here. I would say some of these fields look like they're an eternity behind, but definitely more than 2 weeks behind. When you're talking about Texas, then you have to start thinking about, do you get an early freeze? Does that end up impacting the quality in terms of micronair? So you're still seeing footage from the south of Lubbock area. So this would be West Texas, be the high plains, but it's south. And again, crops out there, I guess that's a planted field. So we don't really know what Texas is going to make, but we know that the moisture that they saw, particularly in certain areas in early May, it was unprecedented. So here's your bad crop. It's really struggling. As you get further north, it gets a lot better, as you'll see. But again, really, really late. And I would add, too, because of when the rain came, right towards the final dates for planting for insurance purposes, a lot of folks ended up not planting cotton, but planted corn or sorghum or something else, generally sorghum. Much improved crop, but probably 3 or 4 weeks behind where they'd like to see it. And again, with Texas in particular, you need an Indian summer to make that have its real production potential. And I want you to imagine whatever Texas country song you like is playing in the background. This one was Amarillo by Morning, if I'm not mistaken. So in the interest of lunch, I'll skip here. But that gives you an idea. Again, everybody's talking about Texas got rains, and they did get rains. But we just haven't been able to follow them up. Now, there was another piece that was missing. He was driving down the road. He panned down onto his odometer so we could see what direction he was going, also see the temperature. It was 109 degrees. And I think I read this morning that it has been 20 some odd straight days since Texas has not been 100 degrees during the daytime temperatures somewhere in Lubbock, or near Lubbock. So the point is, what they didn't need to get, it's the kind of weather they've been getting. This is a quick little study that we did back in the spring, and there's a transition going on. We've been in La Nina, we're moving to El Nino. El Nino usually means Texas gets more rain. The question, and that normally means that Texas harvests more of their crop. When they get more moisture, they harvest more. The issue is basically that El Nino has to have time to help rebuild the soil moisture. And if you get El Nino to come in the middle of a crop year and it wasn't sitting there before the crop was planted, it normally, historically, has not made a big difference in abandonment. They still get higher abandonment. It looks like it's going to play out that way this year. Again, planting rains, but not follow-up rains. And at the end of the day, you end up with something that is an appreciable level of abandonment in Texas. So, moving quickly through, this is once again the managed money, the speculator in the cotton market. And I want to point out again, when the managed money sells out of their long position, look what it does to the price of cotton. It pushes it down. And when they buy, it pushes it up, right here. So, if you didn't hear anything outside of this today, so we can talk about the fundamentals all we want. The fundamentals do matter. But something that matters a whole lot more, particularly in what the absolute level of commodity prices are, is whether there's investment in or out of that from speculators. Much of last year, they were de-investing, right? They were getting out of their position in cotton and other commodities that drove those prices down. Are they starting to change their mind now? Are they starting to look to buy those commodities again? If they do, prices will go up. They will be higher than they would have otherwise. Once again, this is just looking at it back since 20. We've seen prices rise when the specs bought. We've seen prices go down when the specs sold. So figure out the speculator, you'll get most of the market right. And then something too, when we talk about the specs buying or selling, there are some speculators that want to only be long commodities. There's some that are willing to be short. Last year when prices were high, there was, in the managed money portion of cotton, there was virtually no interest in being short the market. The only people that wanted to be in cotton wanted to be long. And then over last year, we started to see some of those longs take the profits and get out. But then last summer and into this fall, particularly in October, when that stacks price was being generated, these specs just started putting on short positions. So in other words, negative bets. Not saying, well, I don't want to be long cotton, I want to be short. That drove the price down. What we're seeing in the market this week, in particular, is probably a lot of things getting out. A lot of the flushing out of the shorts. What we'll want to see for a sustained higher rally would be that this red line, the lean. Investors start to look at it and say, cotton is something I want to own, not something I just want to get out of my short. So hopefully that is happening, and that will help to reinflate the price of cotton. Cotton was not in a bubble last year with the U.S. dollar strengthening and holding its premium. Commodities in general were under pressure, not just cotton. Usually when cotton goes down, it's oftentimes in sympathy with what's going on in the U.S. dollar and other commodities. What we're seeing here in the last couple of weeks has been a much better situation with commodities in general. They've been floating back up, and I think cotton's part of that as well. So, at the end of the day, here we are with the U.S. balance sheet. What does it mean for prices? Remember, what's important is going to be not only the crop size, but the level of demand. Can we hit this 16 million bales of offtake or more? We've got some work to do. But if we regress this out and just simply use math to say, well, historically, when we've had this stocks to use ratio, what are prices? It would predict that prices should be about 80 cents a pound, which is where we were just a week or so ago. Not to say this is always right, but it's a relative type measure of where prices should be. Okay? So what about a couple scenarios? Well, what if we make that $15.5 million crop, right? And we make the USDA export and domestic projection offtake about 16 million bales. Then this same model would shift prices over here, because your stocks to use ratio would go down, and you'd be looking at about $1 a ton. Okay? So that's the whole important thing there. If we talk about the crops lower and demand holds up, then we can see significantly higher prices. In other words, this price movement that we're seeing maybe is justified and sustained. But let's say the crop's even a little bit smaller, 15.2 million bales, right? But instead of exporting 15.95, or excuse me, selling 15.95 bales of offtake, we're 1 million bales lower. Then the projection's right back at 80 cents. So this kind of illustrates the fact that it's not only about the size of the crop, right, which is definitely getting smaller. We still need to see that broad-based demand from outside of China and the rest of the world come in, and that will only come when business picks up at the mill level, and that will come when brands and retailers come back with their orders. So in conclusion, from a bullish standpoint, as of late, the macroeconomics have been better because people are starting to wonder, can we have a soft landing? Has the U.S. dollar peaked? Will we see commodities reinflate in general? Ag prices, certainly, corn, soybeans, rice, they've all been up significantly. China reopened their economy last year and basically said we're going to abandon the zero COVID policy. That has not turned out to be as big of a catalyst for their GDP as they would like, so they're probably going to add stimulus into their economy. That's a bullish factor. China's a big buyer of not only commodities, but just even at the retail level. They have 1.3 billion people, second largest economy in the world. And then China has some crop issues this year to the extent we don't know yet. Stocks are getting tight in China, and that has developed into a price premium for cotton in China versus the rest of the world. And I mentioned before, that helps foster demand. And then two, the speculators. Speculators not long the market, they were short the market. They're normally long. So they've already sold. The question is, when do they come back in and buy? So the position that they're in today is positive. We certainly think we have a smaller U.S. crop than was projected just a few weeks ago. And the technical picture, the thing that turns on all these computers that makes them want to buy cotton because the charts are good, that has definitely changed in the last week. On the bearish side, we continue to see that mill consumption is weak. And if you talk to a mill today, most of them are going to tell you business is off. They're all optimistic it will improve, but they just hadn't seen it yet. As I showed you before, the inventory levels in the system are coming down, but they're still elevated compared to where they were just before the pandemic. So we need to get those back in to the right levels. And then I think just generally talking to brands and retailers, the little bit that I do to the very end user, right, to the Levi's of the world, they're all just saying we're just still worried about the consumer. The consumer we're seeing their credit card levels go up, we're seeing their debt levels go up, their disposable income is not as strong as it was a couple of years ago. So they're concerned about the consumer going forward into this higher interest rate environment. Southern Hemisphere, Brazil has a record crop this year. They've grown the largest crop they've ever grown. Australia has a good crop. Next year, Australia will probably have less production because of El Nino. But right now, there's plenty of machine harvested cotton that many folks will swap in for U.S. cotton that's available at the tail end of this marketing year into next year. And then again, as I mentioned before, Pakistan has a larger crop. So that customer for U.S. cotton will be smaller this year than they were last year. U.S. new crop sales are lagging where we'd like them to be. All those liquidity issues and emerging markets with getting U.S. dollars and just their economic issues in those countries where our big customers are, Turkey, Pakistan, they're not resolved. And then finally, just be remembering for next year, if El Nino does come in like we expect, and like the forecasters are saying, Texas will have a better moisture profile likely this time next year than they do this year. So that's something that people will be thinking about as well. With that, I just want to again say thank you for your time. Staplcotn appreciates being here, and we appreciate Georgia Cotton. Thank you. Thank you, Terry.
Greg Sykes is going to come ask a blessing for us. We are going to do another drawing. This $250 Visa gift card. Go ahead and make sure I grab the right one here. Yeah, everybody's correct. 576852. Five 76844. 44. Douglas, do. All right, Greg, come get that stain off of us. Let's do it.
Let us pray. Dear Heavenly Father, we thank you for this day. Father, we thank you for the opportunity you've given us here today to come, Father, to learn more about our industry. Father, we thank you for allowing us to be stewards of your land. And Father, we just ask you now to go with us and be with us and keep us safe. Father, we ask you to bless this food, bless those who prepared it. And Father, just let us nourish us to go and better serve you. Father, we ask all these things in the name of your Son and our Savior, Jesus Christ. Amen.